In Forex, I mean, who wouldn't love a shortcut?
Hmm.
Some secret weapon, right? To just, like, instantly spot those winning trades.
Well, how about a pattern so clear it's almost like having X-ray vision for the market?
We're talking about the ICT ATM method on today's deep dive.
And it's not just about spotting a shape on the chart. It's about understanding the why, the story behind the move.
Exactly. So the ICT ATM method, it was developed by the Inner Circle trader. It's all about price action. You can use this to find those potential reversals, and not just in Forex, any market, stocks, you name it.
And what I really like is it all plays out on the 60-minute chart.
Okay, so none of those crazy scalping strategies.
No, 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 no. This is about taking a breath, looking at the bigger picture. And you know what's really the heart of it? Support and resistance, but with like a whole new perspective on them.
Right, like seeing them in a totally new light. So imagine this.
Yeah.
You're looking at your charts and you see this, well, it kind of looks like a check mark after like a recent high. What's going on there?
That's your bearish ATM setup right there. And it's not just some random shape, right? The market, it made a high, broke below it, tried to rally back up, and then bam, got rejected.
Rejected at that exact same level.
Exactly, showing weakness. And you often see that rejection line up perfectly with where those big institutions have their stop loss orders.
So they get triggered, and it's just a cascade of selling.
Exactly, and that's what we can exploit.
Now, speaking of examples, our sources mentioned one with USD, right, where this pattern played out.
Yeah, and what made that one really stand out was it wasn't just a single check mark. It was part of this bigger two-stage move down. The market had already shown us it was weak, making lower highs.
So this ATM setup was like confirmation.
Yeah, like the nail in the coffin. Like, the sellers are in control here. Pay attention.
So that two-stage move, that's like a huge red flag for traders, right?
Absolutely. Like, alarm bells going off. It's telling you the momentum is shifting. We might be going from bullish to bearish here. And a lot of traders, they miss this part.
Yeah, they get caught up in the day-to-day noise.
Exactly. But that two-stage move, that's the difference between a high probability setup and just like a random blip on the chart.
Okay, so we've spotted the check mark. We've got our two-stage confirmation. Everything is looking bearish. What do we do?
We'll hold your horses. Before we even think about jumping in, we've got to talk risk management. And with a bearish ATM, your stop loss is going to go just above the highest point of that check mark, right at that rejection point.
So we're basically saying, okay, market, if you're going to prove us wrong, you're going to have to break through this level.
Exactly. We're limiting our downside.
Smart. So where's our profit target on this setup?
Well, in that USD example, the swing low below the old low, that made sense as a target. We want to ride that whole wave down, right? And here's the cool part. Often when you map this out, you'll see a really nice risk-reward ratio. Like, the potential gain is way bigger than the risk.
Music to a trader's ears. Minimize risk, maximize reward.
Exactly. Now, that swing low, that's like our initial target, but we can fine-tune things, maybe reduce our risk even more, and that's where optimal trade entry comes in. But to do that, we got to zoom in a bit.
Okay, so we're going microscopic on this trade.
Exactly. So we might switch from that 60-minute chart down to, say, a 15-minute, and on that time frame, we can often find a more precise entry point still within that bigger ATM setup.
I'm picking up what you're putting down.
This lets us tighten our stop loss, maybe even shave off a few pips, but keep that same profit target.
Same reward, less risk. I get why traders love this.
It's all about precision, understanding those little nuances in the price action.
This is all gold, but I gotta ask, what about when the market's not in a checkmark mood? What about when it wants to go up?
Well, for that, we've got the bullish ATM setup. Basically everything we just talked about, but reversed.
Like looking in a mirror.
Right. Instead of that check mark, we're looking for what's called a crooked number 7. Price breaks above a recent high, pulls back a bit to test that level, and then boom, bounces back up.
Okay, so it's breaking through resistance, then it's like just checking, and then up it goes.
You got it. And just like the bearish ATM, this pattern's even stronger when it's part of a larger two-stage move. This time, a two-stage move up. Tells us the market might be shifting from bearish to bullish.
Okay, so we spot our bullish ATM. We see that two-stage move confirming things. What's the play?
Risk management first, always. So we'd put our stop loss just below the low of that crooked 7, that point where the market held support during the retest.
Makes sense. If it breaks back below there, our bullish idea was wrong. Time to cut losses.
Exactly. And for our profit target, we're looking for those nearby swing highs the price might be attracted to. Remember that your USD example we were talking about earlier? They had a really clear example of a bullish ATM.
Oh, right, the one where Going to a lower time frame made a big difference.
Exactly. On the hourly chart, the setup looked decent, but the stop loss was a little wide for my liking. But then when they zoomed in, first to the 15-minute, then to a 5-minute chart, boom, they found an entry point using that optimal trade entry.
So they really shrunk that risk, but kept the same profit potential they saw on the hourly.
Exactly. And it just goes to show how adaptable this method is. You can tailor it to your own risk tolerance, your own trading style.
Some people are fine with a wider stop loss, longer time frame.
Right. And others, they want to be in and out quickly with that surgical precision.
So it's all about finding the right fit for you,
Right.
but there's no magic formula.
Exactly. The ICT ATM method is like a framework, a starting point. But you, as a trader, you got to adapt. You got to refine it based on the market, your own analysis, how much risk you're comfortable with.
Okay, so it's like having a map, right? But you get to choose your route. You
Yeah.
get to choose what kind of car you're going to drive.
I like that. That's a good analogy because it really comes down to, do you understand the why behind it all? Once you get those underlying principles about market structure, momentum shifts, how these patterns reflect all that, well, you start seeing these setups everywhere.
It's like you've leveled up your market awareness.
Exactly. It's not just about, oh, there's the pattern, time to trade.
You're not a robot.
Right. It's about understanding the bigger picture, the story the market's telling.
So before we wrap up, any
Hmm.
final thoughts for our listeners today? Something to like really ponder as they explore this ICT ATM method.
Here's a question I always ask myself. How does understanding this method, these principles behind it, how does it change how I look at support and resistance? How does it change my trading overall?
Ooh, that's a good one. It's not just about finding those ATM setups, right?
Yeah.
It's about how this knowledge elevates your whole analysis.
Exactly. Connecting the dots, seeing those key levels with fresh eyes.
Well, this has been an incredible deep dive. The ICT ATM method, what a powerful tool.
It all comes down to understanding, adapting, making it your own.
Absolutely.
Yeah.
So until next time, everyone, happy trading.